Everyone. Welcome back. So today I'm going to do a video more for my long-term investors. So I've had a lot of people ask me about investing. When do I start investing? Yesterday is the right answer to that one. And just to be clear, this is going to be about investing, not trading. So do me a favor, like and subscribe to the video so we can get that out of the way. Really helps the channel. I appreciate it. So let's get into it. So like I said, I've had a lot of people ask me about investing, when to start investing. Do I just invest in my 401k? A lot of that is really has to do with your personal goals. But uh, one one thing I'm pretty adamant about is that I am sure, all right, with every bone and cell in my body, that I have an indicator that will consistently beat the market. Okay, it has since you know where's my graph here? It's done it um, since you know 19 whatever. What is this? 1971. Okay, so it started giving us data in 95, and it's been consistent for however many years that is now, of over 50 years. Okay, so we have let me be clear about this. Okay, we have this tool at our disposal. Whether you want to use this tool or not, that's up to you. Okay, um, but the reason that really got me going with this video is because, and there's nothing wrong with investing in a 401k. All right, by all means, please invest into your 401k, especially if you have a decent company match. It's free money. Okay, and just because we have this tool doesn't mean that you should go all in and not invest in your 401k at all. But what we're talking about here is using this in addition to. Okay, so there's no one way to attack investing or trading. There's many different ways and avenues that you can take. Depending on your risk level, your capital, all sorts of things. But when you have a tool like this at your disposal, you got to be a fucking idiot to not use it, in some way. Why wouldn't you? Okay. So here's this is the Vanguard Retirement Income ETF. Okay. So it's a somewhat newer ETF, but this is going to help hammer my point home, I think. So the ETF started in, what is this, October or September of 2020. Okay. So it's been active for over 4 years now, about 4.5 years. And you have made exactly $0 in almost 5 years. You've actually lost money, okay, in this 5 year period. All right. Now, I understand that this was started during COVID, okay, but let's just see how, if you invested in something like the S&P 500, which is a collection of the 500 top stocks in America. Okay, let's see what had happened if you had invested in the S&P instead. Where would you be at? Would you still be down? Would you be up? Let's see. So this was in um, September of 2020. So let's go to the SPX. September of 2020. By the way, if this doesn't tell you why you should invest your money, just me scrolling here along, and that it's a relatively safe place to put your money. I don't know what else to show you guys. I mean, all it does is go up, right? for the most part. I mean, what this indicator is going to do is it's going to get you out of this shit right here. Okay, these bear markets from uh, 1929. This is a 4-year bear market. Well, you could have been out of this market or shorting this market and making some real big money. Okay, um, and then you just buy back in again, make some good money, and then you know, obviously the stock market generally goes up. That's just the way it's designed, and that's the way it generally goes up. Okay, but then again, you have these periods here where, like in 2001, where you have this bear market. 2008, obviously, you have to zoom in a little bit more to actually see the damage that's done here. Um, you know, uh, 2008 financial crisis. Um, you have a bear market here. Uh, I'm sorry, here in 2021 to 2022, and a 2022 area. So this will help get you out. I think I have this set up wrong. Do I have my higher time frame? So this, yeah, let's do this. So this will help you um, get rid of. There we go. That looks better. So this will help you get rid of. You don't want to be in the market at this time. That's just the reality. Or if you are one of those people who don't want to touch your 401k, or you always want to be investing your 401k, which I do understand. I'm not saying don't do that. I'm just saying you can do this in a smarter way. Okay. For instance, you can go, you can take your foot off the pedal and go to a fund that is safer in times like this when you get a sell signal. Okay. And then when you get a buy signal again, then you can jump back in, and obviously maybe go into something a little more aggressive. Um, so um, yeah, my point is, you guys should be using this tool. It's extremely accurate, um, and you should be using it in addition to. I think you should be using it in addition to your 401k. Okay, so you can invest in something like the SPY, which is tracks the S&P 500 here, which I'll pull up here in a second. Um, but the biggest thing is you don't want, I mean, you had a drop here from 47, what, 4,800 area down to uh, the 3,500 area. Okay, that's a big drop. All right, that's about a 30% drop. Okay, um, and within that 30% drop, had you gone into one of the instruments that I'm talking about, and you don't have to do this again. You can just sell, but if had you shorted something like this, you would have been looking at something like up to 90% gains, or somewhere in that ballpark. I'm not talking about options. I'm talking about a stock here, ETF, a triple leverage ETF. If you don't know what that is, I do a separate video on that. Please go back and watch that. Um, but it comes down to opportunity cost. Okay, so when you have these periods where you have these sell signals, right, or these bear markets, yes, it's a great opportunity to buy, but where are you going to buy? You don't want to buy up here. You want to buy down here. Okay, you want to buy at the bottoms, right? And when you have a tool that can fairly accurately, as in over 80% of the time, call whether call tops and bottoms, if you will, then you use that tool. Okay, and it's going to just completely change your life, really. I, I mean, um, okay, so let's go back to, and I'll show you. Let's see, what was that? October. Uh, what did I say? Or no, September 2020 for this ETF, right? So September 2020 to today, we are at a grant. We're actually at a small loss, okay? Because we, again, assuming, I'm just going off the start of the fund, okay? Which was at about $25 to start, okay, in September of 2020, all right? And you're at a small loss, but about break even. Had you invested that money in something like the SPX or the SPY, which is again, the SPY is what tracks the S&P, you would have had, let's go to September 2020, right? So that's, look at that. Okay. So September 2020. So had you just invested in the S&P instead, you'd be looking at, so we're in at 330 and we're at about 550 now. So I don't know. I think I could do that math real quick, but half of 330 is what? 165, right? Yeah. So 165. So 330 and 165 is what? Sorry, I'm doing dumb math right here. 330. So you're up. Had you invested in that instead of your retirement fund 5 years ago, your retirement fund is at a slight loss, about break even. The S&P in that time frame is up over 50%. Okay. So why would you put your money into a retirement fund when you can just invest it into the S&P for, you know, a ton more return wise? It all comes down to opportunity cost. Is your money working for you in that 5 years in that retirement fund? No, absolutely not. Is it working for you in the S&P 500? I would say so. 10%, over 10% return years per year in that 5 year period. And that includes this bear market. Yes, absolutely. This is why I'm sharing this information for you guys. So you can have the more knowledge you have, the better decisions you can make. Okay. And again, that is just talking about straight investing. That's not even saying, okay, invest in September, or invest when you see a buy signal, which was actually not at 330, but we got this buy signal at about 280. Okay. And then you could have then sold when it not quite doubled, but almost doubled. Okay. Up about 40 something percent here, sold at the top, done something better with your money. Or one of those better things to do is to short this market here during the bear market, make money on the way down, and then buy again here when you start to buy. And again, the indicator's not perfect, right? So you got a sell signal here. Yeah. So maybe you sell, right? But you're buying in right again almost immediately. So, oh, okay, well, false signal. And those profits from this loss right here, the profits that you're making, you're already back in the profit here. All right. And now we're headed back up. We'll have to see what happens here with this sell signal. It's kind of iffy right now. But either way, you are just smashing the market. So instead of something like those 50 something percent returns, had you done what I said and actually bought in at the buy signals instead of putting your money in the ETF. So instead of just buying and holding, again, you're buying, shorting here. Okay. And by shorting, we use usually the SPXS instrument, which is a 3-time leveraged ETF. Again, check out my video on ETFs. or leveraged ETFs. Um, and again, selling here at the local top, the top here, you know, making money on the way down, because that's what happens when you're shorting. When the market goes down, you're making money. Just the same as when you're buying a stock and holding it and it goes up and you make money. When you're shorting a stock, when you're short a stock and the market goes down, you're making money. So so that's all we're doing. In a nutshell, you're buying, and you can buy at every point here. So you get a buy signal here. Okay, you can buy one lot. Okay, so maybe that's, let's just say $100. So every time you see a buy signal, you bet 100. You invest $100. Okay, so instead of just, and this will exacerbate the returns even more. Okay, so because you're not just buying once here and holding, which again is good, you would be up, however much percent, but as you're winning, you're continuing to add to your bet. So your average is still, what's your average between here and here? Well, it's probably somewhere around here, right? But you have 1, 2, 3, 4, 5, 6, 7, 8. Instead of $100 you put in, now you have $800. So instead of making 40% on $100, which would be, again, my math, but 40 40% on $100 would be $40, right? So instead of that, you're making about 20% on $800. Okay, which is what? It's more than 40. It's like almost 200. 100 and, I don't know, 75 maybe. I don't know. In that ballpark. So that's what you can do. Then you get the sell signal. Boom. Then you can short. Okay. Then you can go short, get another sell signal, go short again, get another sell signal, go short again. And then you can take profits at any point along the way, or you can get out when you get the buy signal. And again, that's your signal to then go long again. Yeah, but it's really as simple as that. I don't expect you guys to understand all the terminology, but I hope that by seeing this video, you can at least start to understand how things work. Okay, and if this video has piqued your interest and you want to learn more about how to do this, then please send me a message at MT Investment Group. Get in touch with me on Facebook, Colin Renahan, or leave a comment below. This is really a tool I think everyone should use. It works great, not only for day trading, obviously, but this is for long-term investing. It's consistent, it's accurate. Once you get going, it's easy. And these plays, so you're buying here in, sorry, my head's in the way. So you're buying here on Monday, December 7th, okay? Your next buy signal doesn't come until March. So that's 2 months later, right? So my point is this isn't something you're going to be looking at every single day. You can peek at this, and obviously with the alerts and everything when you sign up, this goes out to you whenever you get a buy signal. So it's very simple. This isn't something you look at every day. You maybe look at this maybe once a week. You know what I mean? And if you see a buy signal, then you invest. If you get a sell signal, then you're pulling, then you're selling or shorting. Okay. But this is not something you're going to be in every day. So what was that? December. So August was this buy signal. First you had this one in July, August. The next one wasn't until December. The next one wasn't until March. The one after that wasn't until August. So, do you think you guys can dedicate, 4 hours a year to this? I think you can. That's obviously something I think everyone can when I say that. If you think that's something that you can do, that you can invest that amount of time, then I will take the time to teach you how to do this. And as you can see, the returns, it pays for itself. Even with this long-term investing, yes, it takes a little bit longer for the long-term investors to actually start to see those results. These trades are, months and apart. I mean, granted, you're winning this entire trip up. You're constantly making money, right? So it's not like you're not seeing returns, but again, these alerts are months apart. You know what I mean? So, anyways, that's all I got for this video. I'll go deeper, maybe another time, a little bit more on this, but I just wanted to kind of pull this in a little bit. So this is a tool that's extremely accurate. It's very consistent. It can help you be consistent when you're entering, when do I buy? When do I sell? This literally tells you. It's easy to use. The setup, you should really, especially for long-term investors, you guys should get this almost immediately. An opportunity cost. Make sure your money is working for you, guys. It's because it's not in retirement funds like this, all right? In 5 years, your money hasn't done a fucking thing. You actually lost money probably because of fees, all right? Whereas in 5 years here, look what happened. You're up over 50%, okay? So, and again, this is something, I'm going to try and zoom out as much as I can. Yes, you have down periods, but where's the market going, okay? So if you're not close to retirement, if you're not going to retire in the next 4 or 5 years, then this is something I would absolutely look into. And even if you are, I would still look into it because, this can be an awesome tool to, help probably take your retirement a little bit further. And as far as risk reward goes, with that, obviously you won't be able to be quite as risky, but you can still capitalize on this. So anyways, that's all I got. Please like and subscribe to the video, to the channel. I put a lot of time and effort into this. I think I put out a lot of good information. So like and subscribe helps the channel. And I'll keep putting out the good shit for you guys. So anyways, appreciate you guys watching. And I think I have one more video coming for you guys. So thanks for watching.